This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. Today is January 25th, 2020. Well, the games don't stop here, that's for sure. Have you seen GameStop? We talked about it with Nick Santiago earlier. Now we're going to be talking about it with John. Stock $13 to $159 today. It's settled around $130. Are you a GameStop owner, a happy GameStop owner? Are you getting out? Why don't you send us an email to kl@kerrylutz.com. Well, happy Monday, John, and the games go on.
Hey, Kerry. Yeah, well, okay, this is definitely a bubble now. It's official because stuff like the GameStop story only happens during the blow-off phase of financial bubbles. And so here's my GameStop story. A few months ago, a friend emailed me with an idea. He said, this is a short-term thing because it's about GameStop, which is a store chain that sells video games and consoles, which means it has no future. But in the short run, Microsoft and Sony are coming out with new game consoles, which means there's going to be this burst of sales, and GameStop will probably benefit from that. And so maybe it's a short-term trade. So I went, okay, that sounds like a fun little thing to do. So I bought some at 10, and it ticked up to like 13 or so. And then I saw a really negative article about it, and that spooked me. So I sold it. So, made a few points. And then just lately here, I saw an article headline with GameStop in big letters. And I thought, oh, did that thing go bankrupt or something? It should be expected to, because it's a physical store chain in a digital world. But instead, it was a story about how GameStop had gone up to $50 a share as all the Robinhood traders picked up on it and started bidding it up. And then a couple of days later, it went up to 100. And then today it went up to 150. As you said, it's down to like 130 right now, but still crazy spike in a company that really doesn't have a future. It's just a hot name that traders have picked up on. And see, that's the kind of thing, in and of itself, it's not a big deal, except that I missed out on a huge gain by not just forgetting I owned it and walking away for a while. But stuff like that happens when markets are extremely overexcited. In other words, when there's a bunch of traders out there who have made some serious money chasing trends, and now kind of sort of think they're a genius, because that's how you feel when you've made a lot of money. And so now they're willing to roll the dice. And when a name comes up that's exciting to them, or at least a name that they know, they all pile in and they create these huge moves. Tesla's another one, which I'm short that one, so I'm talking my book here. But Tesla went from about 80 in March of last year to 880 just a week ago. And now it's, I think, a little bit above that. It's like 890 right now. And just on principle, when a stock does that, you need to short it, right? Because nothing is worth 1,000% more than it was worth a year ago, as a general rule. Usually you get a big correction from there. But you never know in a bubble market, because people tend to see something going way up as a buy signal rather than a sell signal. And if you look at the headlines now, bubble is all over the place. Goldman Sachs has come out and listed the stocks they think are in bubble territory, and there's 39 of them right now. And a lot of big money managers like Ray Dalio is out there saying really apocalyptic things about the world. So smart money is starting to pick up on the fact that we're in blow-off territory now. And that does not mean that it ends right now. It just means that that on the short side of things, in other words, there's selling pressure building up that will eventually win out over the irrational buying. But, we are back there. We're right back in another bubble. We had the gold and silver bubble in 1980 and the tech stock bubble in the late 1980s, or I'm sorry, the junk bond bubble, then the tech stock bubble in the 90s, then the housing bubble in the 2000s, and now we're back to the everything bubble, which ought to be the end of the road. But pretty much wherever you look now, you can make the case that the asset class you're looking at is a bubble, whether it's bonds or many different categories of stock or many different categories of debt. You know, junk bonds are now yielding the lowest they've ever yielded in the aggregate. So again, pretty much wherever you look, it's a bubble. And if you saw that movie, The Big Short, there's a funny scene where a bunch of hedge fund guys go to Florida to see if it's really a housing bubble. And what they find is just astounding to them. And then one of them is on the phone afterwards going, it's a bubble, short it all, you know? And that's the way I feel right now. And I think that that's the way it's going to play out, just like the housing bubble and the tech stock bubble and the junk bond bubble all played out. But you can't know the timing of these things. You know, we could have another crazy year, or this could all fall apart this week. Like today, stocks were extremely volatile. They were up and then way down, and now they're, you know, still down, but not way down. So I think volatility is probably going to be the name of the game going forward, at least in the short run.
Hey, just remember that the market can stay irrational longer than you can stay solvent. And like you say, we don't know how long it's going to last, but bubble territory, if you look at the individual FANG stocks, the market itself may not appear to be a bubble, the indices, but those stocks themselves, like you mentioned, Tesla and the whole gang, when you see how they've gone up over the past 3 to 5 years, you could certainly make an argument that they're in a bubble now, and they've been in a bubble for quite a while. So I guess when stocks like GameStop catch up with the FANGs and start to outperform them, then you know that something is afoot.
Yeah. Well, right now we have more stocks trading at over 10 times sales than we did back in 1999, which was the peak for that kind of craziness. So, you know, by almost any indicator you want to use, whether it's the Buffett indicator, which is equity market capitalization to GDP, or just PE ratios of a lot of these stocks, or price to sales, we're beyond any previous bubble, which means this is a really dangerous time. You know, you can make money by jumping on these trends until you can't anymore. And if you're stuck long in a market that tanks the way, say, tech stocks did in 2000, it's straight down. You know, the old saying, a market takes the escalator up and the elevator down. And bubbles are more so, because when they pop, they just gap down. And that's the danger for a lot of people now. And, you know, we'll see when it happens, but I think that it's going to happen is a done deal. That is an absolute guarantee based on any kind of reading of financial history that you want to do. And one of the things that might be making the markets volatile right now is that Biden is apparently having trouble selling the $1.9 trillion stimulus plan that he wants to do to the rest of Congress. You know, they're looking at it, I guess a lot of senators at least are looking at it and saying, nah, this costs too much. You know, you're going to need to scale it back. So there might be a little bit of a delay and a little bit of a battle before they get the kind of bailout that they want. And that's the kind of thing that would totally freak the markets out, because they're expecting huge amounts of new money flowing in, especially to those Robinhood accounts. And that's the rationale for buying GameStop or Tesla or really Amazon or Google right now. You know, and then there's the stay-at-home stock bubble, which kind of has a fatal contradiction right now, because those stocks will do well as long as we stay locked down, right? You know, Netflix will not do as well as it has in the past. As soon as everybody can go back outside and they don't have to watch, you know, Korean rom-coms anymore, because that's all they haven't seen on Netflix. And so those also become great short candidates, and they also become really dangerous things to own, assuming things get better. Say if the vaccine thing works, or we just give up and start going back out, then all of a sudden, whole categories of overpriced stocks need to go back to their intrinsic values, which are considerably lower. So you have all kinds of downside volatility out there that's possible. And, you know, who knows when it starts, but when it does start, it's going to feel a little bit like today, where you have, you know, spectacularly good things happening, and then boom, everything's down, and then everything's back up, and nobody knows what to do. So, you know, I think this is probably, if we're going to use past periods as our target date, this is like 2007 or late 1999. You know, when there still could be some upward momentum in some things, but you know, you're definitely getting towards the end.
Yeah, I am inclined to agree with you. We just don't know when that is. And look, it could come within a matter of weeks. So what do you do here if you've got a lot of gains, John? How do you protect yourself?
Well, history says you sell everything, and don't try to pick the last few winners in a market where the number of probable losers is growing all the time. Just go to cash. Or, you know, if you're reasonably sophisticated and you're very brave, then you start shorting things. You know, again, back to the movie The Big Short, which is really the, you know, the seminal short sellers piece of art out there, because that's the story of how it works. You see an overvalued market, you see something that's irrational, you start betting against it, but it stays irrational longer than you thought it would, and you're in danger of losing everything, but you hang in there, and then it finally works, and you make a fortune. That, you know, could be the template for what's happening right now, where, you know, it's kind of time to start betting against this stuff one way or another, either selling and going to cash, or selling longs and turning around and shorting them, or whatever. You know, it's time to start feathering into that kind of a position, but it might be too early. You can never know. You know, if this is late 1999, then tech stocks doubled again early in 2000. Before they just totally fell off a cliff. So that's the kind of thing that could be out there. And remember, this is earnings season too, or earnings week for a lot of companies, which means that a lot of the big tech companies are going to put up phenomenal numbers, because this is just a great time for them. You know, the stay-at-home stocks are loving this environment, and big tech in general is loving it. So, for instance, Tesla is going to report Wednesday, and a lot of other big tech stocks are going to report pretty soon. And they're going to say good things about their current operations. So the question will be, what do they project? In other words, what do they think of the year ahead rather than the year that just ended? And we'll see. There's no way to know about that, because logic would dictate that they got to be kind of cautious, because they can't project a big percentage gain from this year into next year if the environment's going to change dramatically. But maybe they'll do that. And they'll announce a lot of new programs and new product offerings. You know, Tesla's going to come out with probably 3 or 4 new models that they'll talk up at their earnings report. And that could get people excited. You could see another pop from there, or, you know, slight caution in the year ahead guidance could just send these stocks off a cliff. And there's no way to know at this point, because that's going to happen. I mean, there will come a time when guidance turns negative and the stocks fall off a cliff. We don't know if this is the time, but nobody else does either, except the guys who are going to make the presentations. So that's part of why the stock market is so volatile right now, because you've got a lot of people on either side of this thought process. And in any given minute, one or the other is doing something that sends stocks in their direction. So, you know, you can't know. This is just volatility that is unavoidable and probably can't be traded. So you want to get as far away from it as possible if you're not someone who wants to speculate on trades and take that risk. You know, if you love riding dramatic upward momentum, then this is your market. But for everybody else, you know, just back off, let it happen, and don't try to profit from it.
So what about the VIX? Because obviously if what you're talking about is true, we're going to see a major blast off on the VIX very quickly, aren't we?
VIX usually spikes at times like this. I don't know what it is right now, but frequently you see moves from the 10 or 12 range into the 80 range when everybody gets terrified, because markets are super volatile. So, you know, wouldn't be a surprise to see 40, 50, 60 on the VIX and maybe more.
Yeah, well, and the VIX right now is about 24. You could buy calls on the VXX, that's possible, or on the QID. I think the key is you go out far enough, maybe towards the early summer. I don't know. Never been great on the short end, but you can get them fairly cheap. And then if it does hit the fan, you can ride them. They'll go up really quickly and then close out the position, right?
Well, yeah, that's that's the short-term volatility trade. But again, we can't know for sure that stocks don't have another leg up, which means the volatility would go down, or the VIX would go down, because VIX only likes downward volatility. Rising stock prices can, that is volatility, but it makes the volatility indexes go down, because you should really think of the VIX as a fear index. It goes up when people are afraid.
Yes.
And down when people are cocky, no matter what the stock market is doing. And there's no guarantee that heading into the summer that we don't get, better economic numbers, and the vaccines are working, and the stimulus is just mainlining into the system, and that we don't get another really spectacular stretch for the stock market. That's conceivable. But it's also conceivable that this thing runs out of steam pretty soon and everything falls off the table. So you just can't know, and so I think if you're going to short things, or maybe if you're going to go long volatility, longer dated options would be a safer bet. You have to pay more for them, but you have more time in which to be right. And I don't know if you saw this, but Nancy Pelosi's husband bought a bunch of tech stock options in December.
Oh.
And who made a ton of money. Surprise, surprise. Nancy Pelosi's making money in a market that's determined by government action, But, and I think the options that he bought they run out to 2022, which means he was taking a long-term perspective, not knowing what the short-term market was going to do. And it worked out for him. But, you never do know. And I'm a lot more comfortable with something that has a couple of years to run, because then all kinds of things could go your way. You could have just a little flash crash if you're shorting things, and then the market goes right back up. But during that flash crash, you got a chance to cash out at a nice profit. And we have those all the time now. Another replay of March of 2020, totally easy to envision. And if you're short via put options, there's your chance to cash out with a double or triple.
Interesting. So you think you got to go out that long, or you think it's imminent?
Well, I have no idea what's going to happen in the next 6 months or so. This feels like, it's obviously a bubble market. It's obviously going to pop. And it's guaranteed to pop in the next couple of years, but not in the next 6 months. So going further out gives you that margin of safety that comes with a lot longer time in which to be right. So I'm way more comfortable going further out, just because who knows in the short run. There are so many cross currents right now between stimulus and geopolitics and domestic politics and valuations, and all of these things can work in either direction right now. So there's no way to know what's going to happen. And earnings coming out, really good earnings for tech stocks. So all of these things are just kind of churning around out there, and they could make the NASDAQ drop by 20%, or they could make it go up by 50%. Either one could happen from the stuff I just named. So there's no real way to know. But if it goes up by 50%, then it's just that much more overvalued and that much more likely to crash by 80% sometime in the next few years.
Very, very possible for sure. And that's the problem. We just don't know when, but it sure is looking very toppy, and it's behaving in such a way that that risk has certainly gone up. And on the long end, just go back to Benjamin Graham. The tree does not grow to the sky, right? It doesn't go straight up like Bitcoin doesn't, and see a lot of parabolic moves in a lot of different markets, and it's got to make you nervous.
Well, yeah, Bitcoin is part of this whole thing too, or cryptos in general, because they trade like tech stocks. Have you noticed? On good days, they go up. So they don't trade like safe haven assets. They trade like .coms or something like that, where people who are excited about positive possibilities in the world jump into them. And so Bitcoin, yeah, it's down from 40,000, but it's still around 30,000, which is a phenomenal run from its last bottom, which was what, 3,000, right? So it's up 1,000%. And Bitcoin is not the best performing cryptocurrency out there. Litecoin is outperforming it, and Ethereum is way up, and a lot of the little ones whose names you've never even heard before are up even more. So this is it looks like the dot-coms to me. It looks like Bitcoin is Amazon, and there's a bunch of other little tiny, faster moving entities that are coming into that market that are doing spectacular things and getting everybody excited. Most of them will be pets.com, however. They'll go to zero. And in this analogy, if Bitcoin is Amazon, it'll go on to be big and better than today. But there are a lot of other players out there that look like they're gaining market share as well as going up. So it's going to be an interesting market there too. But if it behaves like the dot-coms when the bubble bursts, then you'll see Bitcoin go down, but a lot of these other things just be extinguished. Again, the fact that this is not a single sector bubble makes it even scarier, because the bubbles that I named when we first started talking, they were all just one thing, junk bonds or tech stocks or something like that. But now you've got bubbles everywhere. You've got the big tech stocks again, and you've got housing. House prices are now above their 2006 peaks, and they're soaring. And you've got the cryptos, which is a whole separate asset class that we didn't even have before, that's behaving like a bubble, and it just goes on and on. So when this thing blows, it is going to just do spectacularly crazy things, because there's so much money out there in so many different sectors where there's extreme overvaluation. So this is going to be terrifying when it finally happens, or it'll be great to be short, so it'll be terrifying for everybody else except the shorts, the people who are brave enough to just bet against all this stuff and wait and see what happens.
Yeah, I've been looking for a house in Florida here.
Oh, good luck.
And every single house I look at goes extremely quickly, and at record high prices. Prices are up like 20% in the past 3-4 months. And
well, Kerry, now you're competing with Goldman Sachs's prop trading desk. Yeah. When they move their people down here, they can afford big houses.
Yeah, bigger than me, for sure. I don't want anything that elaborate. I just want a place with a nice office so I could keep doing the show. But I came to the conclusion last night, looking at the MLS, that we're getting close to a peak in real estate prices. And the beauty in Florida is all we need to see is higher rates, which we could easily see. The rates have gone up a bit. And we see, like, in the place where people are moving from, like New York, like California, Illinois, all those states that are going down the sinkhole really quick. All we need to do is see their markets crash, and then you can't sell your house in New York and you want to move to Florida. What do? And that's what I'm kind of anticipating. I mean, I see I went to look at a new development, townhouses, smaller than what I have now. And I wanted this 1 4-bedroom, and I was ready to sign the contract yesterday. And I get to the place, it's literally around the corner from me. Talk to the guy, I said, I want the 4-bedroom one. And he says, sorry, we just sold the last one. And we only have 2 of the smaller ones left. And I just said, this is so indicative of a peak, of a market peak. Mm-hmm. I probably should just sit back and wait for the inevitable to occur, whenever that might be. I think it's going to happen soon, John.
Well, Kerry, historically, the way it works out best is if you, when you're obviously in a housing bubble, you rent something spectacular, like pay up for a gorgeous house, live there, pay the rent for 3 or 4 years. And then when everything crashes, you buy that place for half the price that it would have taken you to buy it if you bought it right at the peak. And so you end up making money while living in a gorgeous place. So do that.
That's what I've more or less done. And my unit is actually, it's a beautiful brand new townhouse, 3 years old. And I was the first person in it. I'm renting from Chinese investors, and they own like half the place here. Unbelievable. And my agent, they're Chinese and they're citizens, and they can't buy these units fast enough, John. It's amazing. Over 100 of them, and they own a bunch themselves. And I'm looking at it, I'm saying, hey, a little trade tensions with China. They decide they need to dump their properties, and it doesn't take much to start a stampede for the exit. The precipitating event could be the market going lower. It could be any number of events, municipal bond defaults, all these things. Everything, the black swans are just circling around here, like basically, bottom feeders, just like the blackbirds just waiting for the carcasses to appear so they can have dinner. And I kind of feel that's the way the market is right now.
Yeah, and you mentioned interest rates, and that's the main candidate for popping this thing, because let mortgage rates go back up into the fours, and then all of a sudden these prices don't make any sense, because with housing there's a valuation measure called affordability, which is kind of analogous to a PE ratio on a stock. It's how many of the average houses in an area can the average person with the average salary buy. And when they, with their salary, can qualify for a mortgage to buy most of the houses around them, then houses are affordable. But when they can't qualify to buy anything around them, then affordability has hit a point where nobody else is left to buy, so prices can't go up anymore, and then the market turns down. And I think in terms of affordability, we're towards the top now, because really, in your neighborhood, Kerry, how many people can afford the houses? Probably fewer than 2 years ago. And in a lot of other neighborhoods, hardly anybody can afford to live there anymore if they had to, buy a house at that point. And so you can't go up much from there unless it's all foreign money coming in. And foreign money can work miracles in hot markets, but it's not an across the board kind of thing. That's not going to be something that necessarily keeps Boise, Idaho home prices going up dramatically from here. Most places, it's local affordability that matters. And right now it's at record levels, or record unfavorable levels. It's unaffordable to buy a house in most places. So I think that's how we know we're close to the end of this process.
Yeah, for sure. The affordability index, like down south here, is 176. In the Midwest, it's 217. Oh, this is a year ago. It's about the same right now, but I believe that these numbers are a little bit behind, because I've seen prices here in Florida go up 20% or thereabouts in the past 4 or 5 months, John. It's the new houses, the developers, when you look at it, it has an arrow for whether house prices are going up and cut or down. So what you see is pre-owned houses, a lot of them prices being cut different areas, but the new houses all going up. So it's an interesting quandary. And hey, this is why you need to pay attention. You need to really get a handle. If you got profits, I always say, and I love Bernard Baruch, no one ever went broke taking a profit in the market. At least some trailing stops, perhaps 10% trailing stops. You might get stopped at and it might go higher, but you never know. And we could see the mother of all crashes here. The crash, every boom ends with a bust, right? Always got to remember that.
Yes, and we've had a bunch of them. Just look at a little bit of financial history, just of our lifetimes. Start in the 1970s, and you will see a bubble every 10 or so years. And every single time it bursts and wipes out the people who were the most enthusiastic about that bubble months before. And this is the biggest of all time, so bursting is going to be commensurately crazy. So just, yeah, don't get caught in it. Even if you miss out on a year of easy money by going all to cash, you will be so glad you did when this thing burst.
Couldn't agree with you more. We'll leave it at that. Make sure you go over to John's site, dollarcollapse.com. Sign up for his newsletter. Sign up for ours, financialsurvivalnetwork.com. Keep your eyes open. Caution is the byword. Hey, maybe it'll go on for another 6 months or a year. It's not going to go on forever. This isn't a new era. And that's the other thing, John. When you have these bubbles, there's always reasons that the people invested in the bubble say that it can't pop. And they're always wrong in the long run. So be aware. Send us your emails. What do you think? When's the bubble going to pop? Maybe we'll have a contest to pick the date the bubble pops. I think it's going to be sometime in February, my gut feel. But hey, I've been wrong many times before. I could be wrong now. In any event, hey, send us your emails, kl@kerrylutz.com. We'll pick up next week. And who knows, maybe GameStop will be taking over housing stocks, and maybe they'll be buying out Tesla. They'll be doing so well, right? And we'll catch you next week, John. Be well.
See you, Kerry.
This is the Financial Survival Network. Now more than ever. The Financial Survival Network.